just to scan back on 2024. Because if I told you this was the way it was going to end, I think you would have finished the meeting quite quickly. Because let's imagine it's December 2023. And with our expert panel, we say this is the way the next 12 months will roll. First, Trump will be back. And I played a game, how long could we go without saying Trump? Okay, done.
Done.
So first, Trump will be back. Biden's out, Trump's back, Democrats out, Republicans in. South Korea will go under martial law for about an hour. Last night, South Korea goes under martial law for just the evening. That we will have the busiest year in all of recorded history for democracy. We don't have a year that has been busier for humanity, society going to the polls. And that includes India. Modi can't form a government. He must find partners. It includes Mexico. We have the most remarkable outcome. In Mexico, we find that from a cultural perspective, a relatively conservative society, Catholic society, votes in a Jewish woman as head of state. Now that's quite interesting. Taiwan was probably the earliest election result in terms of importance. Who else? Namibia. Botswana, thank you. Botswana. Namibia. SWAPO again. But SWAPO by the thinnest margin since 1990. The UK goes from Conservative to Labour.
Mozambique.
They should brace for some tax hikes. Mozambique, thanks,
Yeah.
Busli. France can't form a majority government. And so it rolls. Who am I forgetting? South Africa. Yeah, what about us? And we do something remarkable. We form a government of national unity. And I'll have the first go by making some sort of dipstick economics that, this seems to be going better than most speculated going into the election. And Busi, I've stolen from you because you did a presentation for me earlier in the year. And we are now on day 250 something. Let's call it day 258 of uninterrupted energy. Now all the naysayers are, but what about more? Day 258. My diesel bill has collapsed. I'm still scared whether I should take a photo of the jerry cans and the generator and say, from the past. Like, touch wood every time I make this joke, but, here we are. Okay, so let's go to our panel, and I want to play a game with you. Our panel needs absolutely no introduction. If you pay any attention to radio, television, print media, social media, you know every one of our brilliant economic and business minds. Busi, Gina, Sanisha, welcome to the school. Thank you for accepting my invitation. I'm not going to do bios. I said to them, you came late, so you have to catch up. I said to them, I'm going to do this introduction. I love, I hate, I wish. Please introduce yourself. And I'm going to put in a fourth one. It feels like 19-something or 20-something, the year. What year does this most feel like? I'm stealing that from JP. You've disappeared. But when you walked in, it feels like, is this 2008? Is this 2016? So, I love, I hate, I wish, it feels like. And what I mean by this is I love, so I'll lead with example. I love any book in extreme adventuring. I hate admin. If you want to see me fail spectacularly, give me a form to fill out. Make it even worse, give me a deadline. I wish I had the lottery numbers. It feels like 1989. That's me. You're sitting at the end, you think you're going last, you're going first. I love.
So I'm Sanisha Pakusami from Momentum Investments. I love dessert, especially cheesecake.
Cool.
I hate traffic. I drove here from Centurion, and yes, there's even
Thank
traffic
you.
this way.
Thank you.
And I wish that there is more equity and that we see the underdog winning more often. And the year, it feels like just a little bit after 1994. I think there's, seismic shifts that are, I think we're actually just over that cusp now. So I'd say a little, just a few more years after that.
That's lovely. Gina.
I love many things.
Okay, can you, so Sanisha, help me first. Can you say, hi, I'm Gina Skuman from...
Oh, sure.
Yeah.
So, hi, I'm Gina Scowen. I'm an economist at Citibank. I'll keep it simple. I love dogs. I hate deadlines.
But you made one today?
I made 5 this week.
Oh, okay.
Hence I hate them. I wish for next year to be more stable and boring than this year. And it feels a bit like, and maybe I'm thinking of our election outcome, US election outcome, I didn't say the T word, feels somewhere around 2018.
Okay. Cool. Busi,
Okay.
who also screamed in from Pretoria, right?
Yeah.
Thank you for being here.
Apologies. Yeah.
Hi, I'm Busi.
So, yes, my name is Busisiwe Mavuso, and I'm the CEO of Business Leadership South Africa. I love chocolate. I hate...
Actually, you've told me that before.
Yeah, I absolutely do.
Yeah.
I hate crowds. I'm quite antisocial, actually, interestingly enough. I wish I was taller. And it feels like 2007, 2006, at the height of the TM era, 45 consecutive quarters of positive growth, 20-odd%, lower 20s%, unemployment, and great optimism, in the South African environment.
Nice.
Yep.
Around about this time last year, I started quoting you extensively, saying, and I went out on a limb here. This is our relationship, right? I went out on a limb here, and I started quoting you saying that by the end of 2024, South Africa will be in a state of, an almost permanent state of stage 1. And that felt bold, but I wanted to go with you, and here we are. So a massive, massive hat tip.
Absolutely.
But you knew stuff that we didn't.
Did I?
Yeah, because your sleeves were rolled up and you were working in the public-private.
Yes, so I think I had more insight into what was going on than most, and I knew that the work that we're doing was sustainable work. I think from the very first act of bringing in OEMs into Eskom, Adrian, because we tried it as that board of Eskom when we came in, and it was a typical situation of, you bought this VW from me 10 years ago, you've been using Hong Kong parts for 10 years, and now it's kaput, it's falling over, you want to bring it back to me as VW, no chance. And I think they were quite hesitant, they were pushing back, they were not keen to come back and help Eskom, especially in that environment, because remember, the way in which they were pushed out as well, was done quite unceremoniously. A lot of them kept parts just for these, units that they now had to do I don't know what with, because we decided to go a different direction, as ESCOM at that time, State Capture Project, of course. So it took a lot of convincing, it took a lot of engagements, and when they came back, I knew we were actually onto something. But business coming in as well, NICOM being established, 100 million rands that was put up by business, 350 experts that were taken and deployed to the different problematic power stations, that formula could not have worked. And I think we definitely forecast and were very intentional of solving the genesis of the problem. And I think that definitely worked. And Dan has definitely been brilliant. The new board, the minister, that combination could not have worked.
I hope you've got something similar that you can fill us with courage and confidence, but I'm going to leave that for a sec, because Gina says to me in preparing for this evening's conversation, possibly one of the things that matters most when it comes to policy formulation and delivery is Operation Vulindlela 2. Say a little bit more. Say something about 1 and why 2 is so important.
Yeah, absolutely. And we are going to have a better conversation then over the last 10 years, but the risks that could come with that. So, to Busi's point here, we must be very careful. We've been looking at economy for so long that has been all talk, very little action. And so you almost have to be right at the coalface and checking on things all the time in order to guard yourself against that cynicism. I cannot tell you how many times this year I've met with Operation Vulindlela. And I usually ask them the same thing over and over again because we're monitoring progress here. Now, if we go back to 2021, Operation Vulindlela, OV, as my international investors call it because they can't pronounce Vulindlela, it was, at the time, just another team put together by Ramaphosa. So, of course, everyone looks at it and goes, oh, my gosh, it's another team.
Another team
of technocrats, another plan, the amount of Excel spreadsheets I have of plans I've had to track in the past for South Africa that is sitting there dormant, it's in a whole nother story. So they put together this team. I was very pleased to see it was a team of technocrats, quite separate and independent from politics. And they started churning out these kind of detailed reform areas. The way I describe it often to someone new to covering South Africa, it's a bit like a Navy SEALs operation. You identify where the bottleneck is, you take the person, you drop them in, they fix it, they come out, and there we go. The bottleneck's fixed. You call up the presidents and say, the minister's not signing the bill, we need the bill signed, and that's your fast track. And OV, I would say, and this is not OV alone, obviously all the private-public partnerships through this relationship. I also say to people, if you find someone who works from OV at a braai or in a shopping mall or on the street, just give them a high five, shake their hand, give them a hug, and say, well done. Because what ended up happening was that their first phase was unbelievably successful. We have no load shedding.
Yeah.
We at least have a plan for Transnet that obviously phase 2 is going to look at in more detail. And there were other things like spectrum, and network industries. Some of them were more difficult to do, but they definitely succeeded. So now they have this unbelievable track record, but there are not a lot of them. So they also have run out of capacity, which is why you'll see that lately we've got
not a lot of them, not a lot of
people working for OV,
what do we
the
call
team.
them? SEALs or Vulindlelas? What?
OVs, I don't know.
OVs, okay.
And that's why getting the likes of BLSA, BUSA, B4SA, the BER is now taken on analysis for them. You've got a lot of support for them. In fact, if you speak to Rudy Dix from Operation Vulindlela, he looks at you and says, geez, now that we're into phase 2, the number of the queue within cabinets, at their door to say, come help us fix this, and this. It's quite overwhelming. And that's what's so careful now that they're embarking on phase 2, is that they have to choose which reforms need to continue. And that's no surprise. It's the rest of ESCOM, so distribution, transmission, etc. Then Transnet, of course, logistics, railway, ports, all of that. Visas, digitization. And then the big one, which is brand new to all of this. And this is a really big one. And I could almost see, it was like they were looking at me with like deer in the headlights. They've taken on municipalities.
Yeah.
Now that is a big one. Not all 200, and I always forget the number, 256, 273 municipalities. But it's going to be a substantial enough number to represent a substantial part of the population. And that is what needs to take care of the utter awful service delivery, particularly water.
Yeah.
Now, why this is so important for me is that I can tell you all a far more constructive story about South Africa, outlook on South Africa from a top-down perspective. But when you look at South Africa from a bottom-up perspective, I mean, just take a drive through Alex and then into Sandton and then into Roodepoort and then into Carletonville. I mean, that's your bottom-up story.
Yeah.
And, you know, I get this a lot because when I have international investors here particularly, or even those from Cape Town, and we, you know, and we go to National Treasury in the CBD of Pretoria, or we're going into, or at least where the Minerals Council used to be, in the CBD of Johannesburg, or we're driving through to a corporate in Kempton Park. I mean, their eyes are quite wide open. You know, you go to the Ivory Tower of Sandton, and then you see this other lot. And it's important because that bottom-up story of South Africa, I mean, that's the lifeblood. That's where the confidence lies. That's where the future generations are. That's where everything, the backbone of the economy really sits.
And so that's why people live, right?
Exactly. It's our living conditions. And so that's why municipalities is so very important, but it's a very big fish to fry.
Yeah. Okay. You're not done with Transnet. We come back.
Sanisha can do Transnet. Lucy can do Transnet.
You've passed that one. Sanisha, so you also hit a deadline today, economic outlook, global economic outlook. Before we get to what you think is going to happen, I'm keen to know from our conversation, you know, you referenced in our preparation for this a couple of sort of surprises, big events of 2024. You can't choose electricity, that's been done. Vulu and Lela, let's leave that for a second. What else? What else, if we go to end of 2023 and we say, here we are, 12 months later, wow, who would have guessed this?
So I think on the surprises side, you know, we did have quite a significant political shakeup. If we look at the African National Congress and the loss in support from 2019, it was significant. So it was around 57%, 2019, all the way down to 40.2%. That's a massive loss. And I think it was, you know, this is something that we've seen happen globally. So even though we have had so many elections in the world, you know, it was a little bit of a voice of a democratic standing against incumbent governments. There was a great chart in the Financial Times that showed history from 120 years, and we've never had a year where so many incumbent governments lost the elections.
Yeah.
And so, you know, in that vein, South Africa wasn't totally unique. And I think it's because of the pressures that came about with the cost of living crisis. So often people talk about the misery index. So how satisfied or unsatisfied a community or citizens are because of things like inflation and rates of unemployment. But we know that unemployment wasn't as big an issue globally post the pandemic because of all the stimulus measures that came through and propped up the jobs market. But what was a big issue was immigration. And we saw that playing out in parts of Europe, in America. And so bringing it back home, you know, we saw that the inflation issue was quite significant, particularly for your lower end consumer, where more than 40% of their basket spend is related to food. And then you add on top of that transportation costs. So I think, you know, people got to that stage where they were, you know, as South Africans say, gatvol, and they did vote. They came out and they voted for change, just like we saw in the rest of the world. When cost of living crises hit, electorates start to want something different from the incumbent government. And I think, you know, that's surprising and unsurprising because we knew that with the cost of living crisis, there would be some kind of change being ushered in. I think the extent to which the ANC lost support was quite significant, even though we all know there was economic stagnation. We all know there were allegations of corruption. We all know that there was failure on service delivery, but I think the extent to which that came through was quite significant. Just maybe to add to the electricity issue, and it's unfortunate that, we not to put a negative spin on it, but we have climbed that one mountain, and now there are more mountains, as Nelson Mandela said. So, the next mountain will be the water issue and the logistics issue. And in some cases, I think it might take just a little bit more time to fix. And I think it's a little bit more difficult to work out what the economic impact really is. I think with electricity, it was almost reasonably easy to kind of calculate per sector. If you think about the alternatives to water, or in the logistics space, it's very concentrated in the mining sector, maybe even manufacturing sector, or agriculture. So I think it's a little bit more difficult for us to actually ascertain how much GDP we can add going forward when these crises are resolved.
I mean, this feels a little bit disingenuous telling a panel of expert economists exactly this, but I see my colleague Francois Fauchier at the back, and for BLSA, the Centre for African Management Markets, did some work a few years ago trying to estimate, what we would call the true impact of load shedding on the South African economy, which we think has been, widely underestimated by a significant margin. If we try and put a spin on it that's slightly different, do you think, Busi, that we could learn from the errors and the mistakes and the damage done by load shedding to be more effective, more immediate, more urgent with water and with transport?
Definitely, and I think that is already happening. I think when the electricity crisis started at the time, there was definitely an appreciation, but government took a long time to admit.
About
that,
12 years.
Right? That the fundamental problem, that there is a serious fundamental problem, in Eskom. But I think even when they started with the shake-up, to try and change the board and the executive management and whatever the cases, the fact that Eskom continued to be the ground zero for siphoning funds out of the state.
Right.
The fact that the corruption, the malfeasance in the system had gone so deep, so wide, and so high, right? Because I think people were just using this thing as a feeding trough, deliberately tripping this thing, when inducing load shedding so that the diesel mafia can actually benefit. Government closed their ears to all of that. And I think it's not because they didn't know. They chose not to listen, because of course, some of them benefited from the system. So with transport and with water, I think we are not going to make the same mistake. I think the fact that we are in a totally different country from a GNU perspective helps things.
Right.
The fact that you have this entire cadre of ministers who have really brought in this energy. I think it's just been so inspiring to observe a fish swim. Watching ministers do their job. You're looking at them, you say, wow, the fish swims. Of course it swims. That is what it's meant to do.
That's true to someone.
Right, but because we've been subjected to such mediocrity and incompetence for so long, observing people doing their job is just so inspiring. So we had a conversation with Barbara Creasy the other day. The clarity that came from there, Adrian, was absolutely mind-blowing. She says, the success of my ministry is going to be determined by 5 numbers. 250 million tons, that is the amount of freight that we actually need to do to ensure that we can deal with the capacity that industry has. Says at the moment I'm doing 149, so 90 is the gap that I have to plug. Okay. Says the second number is 25 to 30 cranes that we actually have to move per hour so that the trucks, the long queues of trucks that are standing outside of the Durban ports can be minimized. Says at the moment we're doing about 15 to 18 cranes. Says the third number is 600 million passengers that we have to transport through PRASA. At the moment we're sitting at 40. Says the fourth number is 30 million visitors stepping into our airports or utilizing our airports, coming in and out. So that is the tourism. So I think the amount of... that one, I'm actually not sure because she didn't say what the number is at the moment. She's just
15. Someone
right. So she's saying 30, and says the last number is 1.2 million tons that we actually have to do by air freight. Now, if that is your strategy, How do you not get that right? No, this rubbish of long documents, 20
Yeah.
pages, of saying this is what we...
2054.
She's very clear. She knows what success looks like.
Yeah.
And it's a 5-year term. She knows that if at the moment I'm sitting at 149 million tons, 250 is where I had to get to by 2029, what is the progress that we actually have to see, on a year-to-year basis? And if there is a divergence from that target, then you can quickly intervene and say, where is the blockage? And how do we... So I think that kind of clarity. So the reason why I'm saying that I don't think that we're going to be seeing what we saw in load shedding is precisely because you've got this clarity. It's because we've got ministers who get it. Ministers who are interested in seeing South Africa succeed. Who really understand, that probably, South Africans have been very patient. And I think this, honestly, a lot of them, this is their last chance, for us to get this right. Otherwise, honestly, if we are not going to create a conducive environment, if we are not going to grow the economy beyond the 1%, if we are not going to have interventions that are going to ensure that we absorb, the many people that are not currently participating in the economic mainstream to participate. The numbers are saying 1 million people enter the workforce each year, 600,000 of them become needs. Now, that is a scary number.
Sure.
600,000 of them are not going to be in employment, education, and training. That's a recipe for disaster.
Yeah.
Recipe for disaster.
Yeah.
Ticking time bomb. So South Africans have really given this government of national unity the last chance, and I think you have ministers who actually get it.
Let's do something for our economic nerds in the room, because you're talking about skill, capability, capacity, implementation, clear deadlines, clear targets, but all of this requires money. And looking at the fiscus, well, something unusual happened. The ratings agencies are a little bit more upbeat on parts of South Africa. I think it's S&P that said Eskom goes up. Moody's said stable for South Africa, but waving a flag over Transnet. Doesn't change the fact that all of this requires money, Gina, and we're out of money.
We've been out of money for a long time.
Yeah.
long time.
So just help us solve the fiscal problem.
And it is crazy how when we needed money, we went and knocked on the doors of bond investors. And then we had so many of them, and we ran into a problem of growth. And then we had a lot of people saying, we don't need them anymore. Right? That's a big problem. But let's talk about what's happening now, which is a better story, to be honest.
Okay, let's go for it.
We don't have enough money.
Yeah.
We still have a growth problem. It's looking better. And I think we've got that, what I call a stamp of approval in the tone, let me be very specific, of the recent IMF Article 4. So there's a more constructive tone coming out there. As you said, S&P gave us a positive outlook. Moody's and Fitch put us on a stable outlook still, but with a more positive tone.
Right.
There's no one I can find that doesn't have a more constructive outlook on South Africa, which I think, but it's early days. So you need some hard evidence, some hard data. And unfortunately, Q3 GDP was just too soon out the starting block, for anything really concrete to happen. What we're really looking at here is Q1 next year, your cyclical upswings from low inflation, low rates, all of that starts to turn. But going back to fiscal, so we don't have enough revenue. Government revenue. Well, revenue coming from the country.
Okay.
Tax collection, government revenue.
We don't have enough.
No.
No, we don't, because we're running a deficit.
Yep.
Okay.
We don't have enough to stabilize debt at the moment.
Well, but hang on, deficits come from not just not enough revenue, they also
No.
come from
So, and we're stuck with expenditure. That's how I would say.
Okay.
This is a national treasury that we must give a lot of credit to, because they have been very hard on spending more recently, and they've created fiscal discipline in expenditure. Sometimes too harsh, maybe, coming out of COVID to say to frontline workers, 0%. That can come back and bite you. We've seen that, but this is, it's not a perfect science. Debt servicing costs. Wage bill, two of our biggest things we spend money on. Can you reduce those quickly? Absolutely not. So the answer really here is it's a 3-channel answer. Number one, you have to continue to be incredibly disciplined on expenditure. incredibly disciplined. In other words, there is no room to spend on NHI. There is no room to spend right now on a basic income grant, not to say we don't need one, without restructuring the entire grant system. You know, these are things that this GNU can do down the line. But expenditure basically needs to remain as is, and we need a growth solution, which is why, going back to this, if we don't get the basics right, fiscal cannot consolidate, and that just means simply your budget deficits come down. But what this Treasury is doing, which is quite clever, is that if you speak to the Director General, Duncan Peterson, if you speak to the Finance Minister, Enoch Godongwana, if you speak to our 2 Deputy Finance Ministers, who all get on very well, by the way, they will tell you that actually even before the GNU, they managed to get it into the heads of Cabinet that if they take debt to GDP above 75%, you can kiss those votes goodbye because you can't pay for social grants. So they have managed very cleverly over recent years to almost ingrain an implicit fiscal debt anchor into the minds of
That's a
Cabinet.
stroke, right?
Well, I think it's so clever because, yes, we're going to talk about a fiscal rule and a debt anchor for quite some time, and countries kind of like to do it, but they also don't like to do it because now you've got a rule that will obviously at some point be broken. Until you get there, you have to build up a track record of fiscal discipline while you wait for this growth to come, because naturally with the growth, you're going to get the revenue. So that's two sides of this. The third one, and this is getting very technical, so I'm not going to go there in a lot of detail.
No, we got some nerds in the room.
You've got to get a little bit more creative on your funding. In other words, all we have done as a country is issue SAGB, South African government bonds, at the very long end, and that's the steepest yield curve. They've started to move more into the belly of the curve, but we've started to get more creative. Yes, we used JAFECRA, we used the reserves, but in a very responsible way, with the SARB's blessing, and I think it was necessary to use it in a responsible way so it doesn't build up and someone else taps into it. We're starting to look at alternative financing means. We've just issued a Eurobond. We haven't done that for a long, long time. That's also Treasury saying, hey, this is our thumbs up, that we're less risky. We're starting to talk more obviously about a green bond, social bond. You know, the markets out there are ripe for these things, but we do need that belief in ourselves. But right now, the fiscal answer is there is not enough money. So if the likes of, let's say, just hypothetically, a SOE like Transnet needs a bailout, which in my baseline they will, gone are the days, and the late Tito Mboweni used to say giving bailouts like pouring money through a sieve. Gone are the days of 11th hour before the budget, knock on the door and say to Treasury, we need money, and not knowing what it's being spent on. Now, those SOEs basically have to get on their knees and beg. And there's conditionality to it. And it's very important that they don't get it immediately. And for the last, Sanisha sits with me in these embargoed sessions before every budget, and we go and we sit there for 6 hours before the budget's released. And you get the budget in soft copy. And the first thing we do over the last 2 or 3 budgets, Control F, Transnet. Oh, no bailout, done. You know, we know it's not happening. And that's Treasury sending a message going, we know at some point you're likely to need it, but we're not giving it into you very easily. And if you get it, you better prove to us that it's necessary and we're going to see an economic gain from it.
So, Sanisha, you've just written I made a comment earlier, you mentioned as you came in that you've just done your economic outlook. So let's shift the attention from South Africa to a broader picture, because South Africa remains a small, open, commodity-reliant economy with an exchange rate that is vulnerable to global mood and sentiment. What does your economic outlook say?
So I know we said we will try to steer away from the T word.
He was trying there.
But
We're done. We can go Trump.
But I do think, a lot of it is Trump, because there's a lot of economic policy uncertainty related to how Trump can conduct his second term. I think what we have this time around is that his supporters of the Make America Great Again, it's very intensified. We've seen him instituting his henchmen essentially in cabinet. They've got a red sweep. He's got executive and legislative control to pretty much do what he wants on things like tariffs and deregulation and tax cuts and the like. And more importantly, he even secured a popular mandate because it was the first time in over 20 years that the Republicans won the popular vote.
Yeah.
And I think it's quite important because what we've seen around the world is that the electorates have become very polarized. And we've seen that the propensity of voters to want to move towards centrist policies is breaking away because it hasn't worked. And we've seen more inequality growing. And on the back of that, we've seen that the electorates have shifted to either pole. And so often when you find a politician that has won, it's a very narrow victory because you're actually only appealing to a piece of that population. But given that he's also won this popular mandate, I think he's also got that backing. So I think that's quite important in terms of how the policies actually, hit the real underlying economy.
Sorry to interrupt you. You're making the point. He didn't beat Kamala. He absolutely thumped her. And did that? I know when we look backwards, we're always expert with hindsight. But did that surprise you?
So I think
the victory and the size of the victory.
The size of what surprised me was how he made inroads into the parts of the population we thought wouldn't want to vote for him. So he spoke a lot about immigration. So you'd think Latino and black voters wouldn't vote for Trump.
Yeah.
But they did. And
historically, he was draining the swamp. No, yeah. I was like, you can stay as long as you vote for me.
But I think the point that we missed
Don't eat
here...
cats and dogs.
Cats and dogs.
What we missed here was essentially how important the cost of living crisis was to the ordinary voter out there. And I think that's sort of the trick that we missed. So Latino male voters, as much as, they have a view on the immigration stance that Trump was taking, they're also worried about the economy at large. And so when citizens were polled just before the election, the number one concern was the economy. And we saw that in the black vote in America, the youth didn't really feel that they had to be affiliated with the Democratic Party because of the civil rights movement, like we've seen with the older age cohorts. And so they're a little bit more apolitical in a sense and a little bit more experimental with their vote. And I think we saw that vote also going to Trump. So I think that's really the surprise factor that came out. But I think that the takeaway from this, and again, the range of potential outcomes is very wide. And as Gina and I were saying earlier on, what you give to inflation can be taken away from another policy proposal. And it is, obviously still a proposal at this stage. Yeah. But I think ultimately what we will see is continued exceptionalism of America in terms of growth, not in terms of foreign affairs, relative to the rest of the world. So we probably are going to see, another growth divergence. The market is now paring back the potential for interest rate cuts in the US economy. In August, they were looking for 9 cuts by the end of 2025. They're now only looking for 3 because of that inflation effect. Europe, which is a major trading partner of South Africa, still expected to get about 6 cuts by the end of next year. Why? Because the economic powerhouse, Germany, is in deep, deep trouble. So they're closing factories. We've seen that the German IFO, which is like a business sentiment indicator, is about 10 points below its long-term average. So I think, that economic divergence starts opening. China, another big important trading partner for South Africa, obviously because of the commodity conduit there, facing an already weak domestic economy with the consumer being in the dwang for the most part of this year and part of last. The property sector at best could stabilize next year. Yeah. And now on top of that,
they're throwing quite a lot of policy action to try and ignite that domestic sentiment.
And I think, but the policy action there is really just to prevent a fiscal cliff from happening. Okay. So they're trying to prop up the local government so that they can actually pay their workers. So what we've actually seen is that, some of the workers, their pay has been cut. That's not how you're going to ignite consumer confidence in China. I think, the policies that they're doing, it's really just to kind of put a plaster on things for now. Okay. So the quantum of spending has been big. It's been about 10% of GDP. During the global financial crisis, they spent 13% of GDP. But I think it's the way in which they've spent the money. And I think what they really need to do there is to provide a more stable outlook for consumers going forward in terms of their own household financial stability. So things like social reforms, social security nets, pension reforms, and that's not what government is addressing. So I think, the nature of government right now in China is to not dole out, consumer handouts. That's not what they want.
Let's just throw these numbers up in the air. What's the economic growth forecast for the United States 2025? What's your number?
So if you look at the consensus, it's still like hugging 2%. But I wouldn't be surprised if we can get to 3% in America. Okay. So a lot of for example, some of the policies where he has executive control over can be announced in the first quarter of next year. And then obviously there will be a couple of months before it gets into.
So 2 rising for the United States. Give us Europe.
So Europe, I think they're going to really struggle, and they're going to be struggling because of Germany. So you can't have Germany barely growing next year and Europe doing fantastically.
Yeah.
So, and I think because of that deviation in growth, also because of the deviation in the politics. So now we've got maybe not the leader we want in the US, but we've got some political stability. We've got the traffic light coalition, which is in shambles in Germany. So you've got, politically, they've got a negative. Growth, they've got a negative. And so I think that, opens up that chasm. And so we are probably likely to see the dollar strengthening even more, even without the tariffs that could potentially come.
So can I put a 0 growth forecast to Europe?
Look, I think you're not going to get much more than 1% in that area if Germany doesn't pick up.
Okay.
And because Germany hasn't invested in technology for such a long time, it's going to be very difficult for them to keep up with countries like America. So if you had to look at the GDP per capita between the US and Europe, that gap has opened significantly.
Just widening and widening.
It's been wide. It's somewhere between 30 and 40%, that gap now, which is quite significant because America's chugged along because of their investment in technology, and places like Germany haven't done so. And we're finding that gap has picked up.
Okay, so in a world of, I'm just watching the time because I'd like to come to the room and get questions. Let's stay global but bring it local because there's this thing called G20. And I love G20 because it's not 20 countries, it's actually 19. I learned this, the G20 is 19 countries plus 2 bloc members, Europe and Africa, and 4 of the bloc members are also members of the 19. So if you do, 19 plus 2 minus 4 is like the proper name. That's the fun maths that I had this afternoon.
Like G15 or something.
Exactly, exactly. Okay. Anyway, South Africa has the presidency of G20 for a year. The media is intimating that this is 2010 all over again, or could be similar to. So is it time for window flags and side mirror socks? Is there like an industry waiting to be born here? What does G20 mean for, what does the presidency of G20 mean?
So it's absolutely
for business for South Africa.
Yeah, it's absolutely a great opportunity. I think when you look at what India did, for instance, 2 years ago, so we've just taken over from Brazil in 2023, it was India. And for those who experienced India in 2023, they're saying that Modi managed to actually create this excitement as if the country was hosting a World Cup, So he managed to link the G20 to the average man on the street, in terms of what that means. But I guess it was very clear on the messaging, was very clear on the posture, it was very clear since he was going to be, the country is receiving this attention and the spotlight from the economies that matter, economies that he would like investment from. He really managed to highlight what the centers of excellence were in India. And I think he went for 3 things. He said skills, he said manufacturing, and he said innovation. And I really think that it wasn't a 2023 thing. he has really managed to benefit from G20 in 2023 and has actually built momentum. And the economy has actually seen the growth and the investment as a result of G20. So South Africa has that opportunity to actually be very clear on our posture, be very clear on our messaging. I really think that if we can do this right, we keep on saying we want 5 trillion rands investment to be able to grow our economy beyond 1%. And the investment is likely going to come from these 18 countries. So we therefore are going to have to be very clear, Adrian, on what is the messaging, what is the posture, where are the investment opportunities. Let's use this opportunity to launch our re-emergence as a force to be reckoned with, not only in the African continent, but in the developing economies and emerging economies cluster.
Do you think we are too distracted by other things to be able to give this the importance it deserves? And you're using this word that terrifies me, you're saying if.
It's really an if, because it's not just going to be a B issue, it's going to be a G issue as well. We've got a plan from a B20 perspective in terms of how we show up.
Do we have a plan?
From a B20 perspective.
Okay.
But G is actually running, so it's 2 parallel streams that are actually being run. We are going to Davos at the beginning of the year as the B team, to actually spray Davos green, yellow, blue, what are our colors, right? To actually, that is the platform. Yeah, we've got a lot of them, exactly, So that is the platform that we plan to use to launch the B20 or G20 presidency for South Africa. That is the target matters that matter, target market that matters. 500, 600 global leaders, who are looking for investment opportunities. We're already planning bilaterals with a whole lot of CEOs, and companies that are going to be there. And we are taking platforms, on some of the conversations that matter. And we just have to ensure that from a G perspective, we do the same thing.
Historically, there is a legacy of snide comments being made about the disconnect between business and government in South Africa, that it's like as if you're talking to 2 different parties, that we need marriage counseling.
Not anymore. Interestingly enough, I think two weeks ago or something like that, at the request of government, we had a conversation. Finance Minister, DECO Minister, DTIC, and the Minister in the Presidency. Because obviously from a G20 perspective, they are going to be running the finance track and they are going to be running the Sherpa track, where that is sitting in the DECO ministry, as it were. So we're talking about alignment. How do we best align? How do we ensure that the left hand knows what the right hand is doing? How do we actually support and reinforce, the engagements that are going to be happening on the B and G perspective? What are some of the things that we actually want to sponsor in the work streams? Because there are these 6 work streams that we are going to be leading as South Africa. The agenda is not necessarily dictated by South Africa, but we've got an opportunity to can influence that agenda. Now, what are we going in there with? Because those are actually critical work streams, that if we can play that right, we can come up with policy proposals that we take to G20 that can therefore have a significant impact, not just on South Africa, but on all the economies that sit there. For instance, CBAM is a problem, not just for South Africa, but for many other economies. So if it's going to be particular, it's going to really impact a whole lot of our industries. That is a conversation to have, in the energy and climate transition work stream, to say, is there an opportunity for us to can probably maybe push back, the start of CBAM and be given concessions? I don't know whether as developing emerging economies or as all economies, because I think we are all sitting with the same problem that coal continues to be the basis of generating electricity, even in Europe. So it's not just South Africa, exactly. It continues to be the baseload. So we therefore need to have that conversation. Why can't we, give that as a policy proposal from a business perspective to say to government, if we don't watch this thing carefully, it's actually going to affect, and probably not decimate, but impact a whole lot of economies. So we have an opportunity to therefore drive that agenda from a South Africa perspective. So we can make it matter.
So, Jean, I'm trying to find sort of some clever segue here. Let's go with this. All of these global leaders are going to arrive, massive delegations. The numbers that I'm reading are tens of thousands of people will visit the country over the course of the year under our G20 presidency. Could they bring something other than dollars to pay for their accommodation? I'm trying to find the segue to Trump's tweet. Yeah. So, you know, what is the prospects of de-dollarization? And I know that it's very premature that renminbi makes up 4.5% of of global contracting. So I'm not asking, does this happen in 2025? I'm asking for sort of a longer speculation. Could the dollar lose its place?
I mean, how long is a piece of string? You know, yes, it could, but I mean, we're talking decades, possibly.
Sure.
But I mean,
ain't going to happen.
Not in the short term.
Yeah, no, exactly,
happen.
not going to happen. One thing I'll say was interesting is that, and this is why I think Trump feels so threatened, is that it was about, we do monthly prospect reports, publications at Citi on the global outlook, and 2 months ago, it's a beautiful chart. I know you want to see it, so I'll send it to you. But for the first time ever, South-South global trade took over North-North global trade.
Wow.
So there is something happening there, which is why
that is a fascinating
if you're threatened and you're Trump, you're probably going to tweet about it. You know, and the BRICS is getting bigger and it's taking on other countries that some people in the US don't like. And there is, as Sanish was saying, you know, the world is a different place now. It's more polarized. So I don't think it'll happen now, and I don't think it'll happen anytime soon. But it is an interesting trend to watch.
Okay. So let's use that to talk a little bit about currency then. Your thoughts on, you've already suggested stronger dollar. What about the other majors? What about euro? What about yen? What about renminbi? And of course, what about rand?
So I guess hinging onto this topic of de-dollarization, what could potentially accelerate the trend, but again, I'm also in the camp of not happening in the short to medium term. It might not even happen, you know, in our lifetimes. But I think what can accelerate that pace is Trump's fiscal proposals. Because you can get to a point where the debt to GDP number starts to infringe on the legitimacy of the US dollar. So I think, you know, the debt can be kicked down the road for quite some time, but there will be that turning point that comes, and that could be something that I think accelerates that trend. And it looks to be, if you look at the support levels in the US economy, that we could be in for, you know, a couple of periods, a couple of terms of Republican leadership. And so we could end up in a world where we do have a larger budget deficit in the US economy with higher debt levels. I feel quite strongly that, you know, both Europe and the US have a more capitalistic kind of stance, but it's a very different element of capitalism that's playing out. So we're finding that capitalism in the US economy is actually promoting GDP growth, and the capitalism that's underlying the European economy, we're finding that growth is stagnating there. And on the back of that, I don't think, you know, the euro is a very strong contender. It's been quite a difficult thing to get. You know, you need to have that fiscal union and a monetary union. They've managed, you know, on the one side of that, but not the other. In terms of the renminbi and the direction of the currency there, when we go back to Trump's first term in 2016, he started imposing those tariffs around 2018. And we saw, you know, step changes in the CNY that took place at that point. Trump did, of course, blame China for devaluing their currency at the time. And it could be a way out. So we know that this year, what really propped up economic growth in China was exports. So it didn't come from the consumer. It didn't really come from fixed investment. It came from exports. And I think going into 2025, exports are unlikely to be as big a driver. So China will do what it can. So I think, you know, one element is to have that step change in the CNY. In terms of the rand, so South Africa has, you know, the domestic, we're getting our domestic dominoes in place now. But unfortunately, it's happening in an environment where there's a lot of external economic policy uncertainty in the globe, geopolitical risks are playing out. And so, you know, we don't operate in isolation, as you say. So I think from a domestic ticket, we could see rand strength. But from the global side, there are a lot of risks that could keep the rand on the back foot. So if we are in an environment where there's a lot of economic policy uncertainty and there's continued risk aversion in global markets, it's unlikely that the rand is going to completely buck the trend forever. So if we look at what, I think, you know, we spoke about what were the main surprises. Another big surprise that came with this political shift in South Africa was almost the backing for it in terms of sentiment. So as, you know, as Gina says, we need to see concrete action taking place. But I think it was quite phenomenal that, you know, investors bought into the GNU story. We saw that our CDS spread had narrowed when the rest of emerging markets was widening. The rand had strengthened when the emerging market basket was selling off. So I think, you know, there is something to that can still carry our rand a bit stronger. But it's going to be a difficult environment where global risk aversion could potentially be quite high, and that could cause people to shy away from the perceived riskier assets which are inherently emerging markets, including the South African rand.
Let me ask one more question, Jen. I'd like to put it to you. If I look at the year from an investment perspective, sure, you know, maybe here's where I should use my I wish. I wish I had bought Bitcoin at the beginning of the year, $38,000 to $100,000. Fortunately, you know, I had two other. I run a concentrated equity portfolio, and I had two very successful investments, absolutely, you know, different drivers. The one was a extremely successful South African gold miner called Pan African Resources, whose share price went from 4 Rand to 8 Rand, helped by the gold price. The other was Lewis Furnishers, a lonely retailer selling furniture whose share price has galloped up 75%, helped by the two-pot system. I'm giving those as just very personal examples, but I'm wondering, my question that I want to put to you is, you know, although these are two very personal examples, they capture a global sentiment of buoyant capital markets. Can this carry on?
The way we think about this, and all credit due to the great David Lubin, who you know, my former boss, head of emerging markets at Citi, who is now at Chatham House in London. He always used to say, the current account is in China. The capital account is in the US. So you take whatever country you are and you position yourself between those two.
Love that. Yeah.
And you can work out exactly then more or less which direction you're likely to go in. So if the capital account of the US is getting stronger and the current account of China is getting weaker, it's not a very good recipe for South Africa.
Yeah.
That said, if I may, just add on to what Sanish was saying, I do think that local or domestic channel is very important. It's not always appreciated because, you know, as South Africans, we just see the rand get weak and we think, oh, we're not doing well. But it is a relative performance. You know, how South Africa performs relative to other EM currencies is unbelievably important. And I'll give you a very quick and dirty example of this. Please don't go back as the technical people in here and prove me wrong. But just as a quick example of this, if you took EMFX relative performance, when Trump was first elected, the immediate week after, the rand was, I mean, it was sold off so much, and it was the second worst, I can't remember to which currency. I mean, it was just phenomenally horrible. This time around, we were middle of the road. You know, we were still a sell-off, because that's going to happen when you're high-yielding currency and highly tradable, but we were in the middle of the pack. And there is something going on in our risk premium that is better now than before. And that will at least help to minimize, I would say, you know, we'll never know exactly what it would have looked like otherwise, but there is something to be said about that lower country risk premium, hence the positive outlook by S&P, a very independent and fiercely hawkish central bank, which I know you don't all like, but we've spoke about the cost of living, and there's a reason why inflation hurts this economy more than anything else, and the currency therefore within that. And a relatively independent, and I say relatively independent because Treasury is part of government, but when you're talking about treasuries across the world, you know, this Treasury is probably one of the most independent you can get for something that is part of government. You need those if you're not going to sell off any worse than what you already are as an EMFX against this global backdrop.
Do you think do you think there is a chance that the South African Reserve Bank will drop the target from 3 to 6 to 2 to 5? Yes or no?
Yes.
No. I have to say more than no.
Can I ask a question? What time frame?
Yes or no?
Can't you just say drop the target?
Drop the okay, drop
Yeah,
the target.
thank you. Then
Drop
it's
the
not going to be
target.
2 to 5, but
Drop
yes.
the target. Yes, yes. No time frame.
Yes.
Okay. All right, which means an even more strident SARB.
Yeah.
And lower inflation.
And lower inflation.
And more
Yes.
growth.
And more growth. And this cocktail is hopelessly misunderstood, generally.
More consumer spending.
Yeah.
Yep.
Yeah. So can I carve the questions up? Busi, you get the PPP for Stefan first. Do you want to do that?
Yeah, so the public-private sector partnership is definitely going to grow. It's going to continue. You are going to be seeing that Transnet is obviously busy, you know, finalizing the private sector participation. I think it's a unit, whatever, but that model and bringing in the private sector players into the locomotives and into the running of the ports. Interestingly enough, I had a conversation with Operation Vulindlela the other day, and the work that they are doing on water from a reform perspective, one of the amendments that they are going to be making to the water amendment bill or to the water bill is looking at how they allow private sector participation in bulk water provision. So I think we must brace ourselves for that change in a whole lot of industries that were previously monopolies. We are now bringing in a whole lot of private sector participation. It's not privatization, it's private sector participation. And it's interesting because when we had this conversation with the unions on Transnet, they are saying we are worried about where Transnet is. We are, however, concerned about these private sector, about the privatization. And we're saying, but it's not privatization, it's private sector participation. They are saying it's the same thing. But I think really the future of South Africa in a whole lot of monopolies is actually seeing a trend where we're going to be reversing that and bringing in private sector players.
Not to get caught up in this because I think we quickly go down a rabbit hole, but Deng Xiaoping says, I don't care what color the cat is as long as it catches mice.
That's precisely.
So call it what you like.
Yep.
Yeah.
Yep.
Does it catch mice?
It is going to catch mice, absolutely.
Okay,
Yep.
cool. Gina, do you want to have a go then at Patrick's sectors?
Sectors 2. I'm also going to weave in something on the GDP numbers.
Sure.
I think one of the biggest risks for South Africa would be if the GNU doesn't work out for whatever reason we can't see right now, because that seems to be holding this all together, at least certainly the sentiment. But I honestly wouldn't put a very strong probability on that. I really think the GNU will stick together, and probably through more friction points than people currently think. Regarding the sectors, I mean, right now, you know, we're talking reform, and we're talking about a more observable case of structural growth in South Africa or potential. But what bridges, before we get there, because it takes a while for reform to bring us growth, before we get there, I cannot tell you how lucky we are that as this GNU started, so did a cyclical upswing. In other words, inflation has just recently printed 2.8%.
Yeah.
Next week, it's going to go up slightly above 3. We've got a 3 to 6% range. That is unbelievably low for South Africa. And it's low not because we're efficient, it's low because of huge base effects coming from mostly fuel and food. But that means, I mean, I've got, you know, some of my traders are now worried, you know, because the currency's been a bit weak, that, you know, does it mean that the low inflation profile for the first half of the year, that's going to give us at least another 2 rate cuts, so 100 basis points down? You know, could it stop? I mean, I did a quick exercise to show them. The rand would have to be 20 against the dollar every single month from now for the rest of the year for us to move to 5% growth. I mean, 5% CPI at the end of next year, which would be the only thing that would stop the SARB from really cutting. And even then, they could arguably still cut. So The cyclical upswing now is because, number one, inflation is unbelievably low. There is nothing that will drive this GDP growth number as quickly and benefit as many people in this country as low inflation, particularly when it comes from goods inflation, because Sanisha correctly said, I know we look at our CPI basket and we see a 14% weight for food, but we also know that that 14% weight is because the weights are determined by your high income spending trends.
So it's eggs and vegetables.
Oh, my goodness. I mean, your low income, 60% of your population has their baskets are made up of public transport, which is fuel that's very sticky on the way down, and then food, right? Those are your big predominant items. So when you get a goods inflation coming down, it benefits so many people. So there's your first sector, right? Your retail sector. And you can start looking into income groups now. You know, lower income retailers particularly doing better. And then the interest rate cuts that come as a result of this. I mean, 100 basis points isn't huge. It actually takes you to neutral. So it's not accommodative, which means it's not the SARB saying, here, interest rate cuts, please go buy a flat screen TV. It's saying, we're removing the restrictive nature so we can give you some breathing room because inflation allows it. Then the two parts. So you take all of this.
Just to be clear, are you saying 100 more from where we are now?
100 in total from September till March. So from the two we've had, we get another two, 25, 25. Okay. 100 basis points down, inflation coming down and staying down until at least the middle of next year. Obviously, I always have to touch wood. There's no wood here on the currency. But that's because of our own track record. I'm not that concerned about it. And then the two-part system, which you mentioned. Yeah. You know, those withdrawals have been more significant. It doesn't mean that they're all going into retail. A lot of it could very well be going into debt servicing costs and the reduction thereof. I mean, everything we saw in the past was in that regard, but that's great for the economy, right? So your consumer-driven sectors will do better. As a result of that.
Starting and that's with my furniture retailer.
There we go.
Yeah.
As long as it's not credit. We don't want credit.
Patrick, you happy?
Okay. Maybe just quickly, yes, agriculture could get revised because it's just such a volatile number, but it is a very sad number to come out of the elections with. If not for agriculture, nothing else would have surprised us, and it would have been a very subpar 0.4% growth, which would have given us a full percent this year. Instead, we're looking at 0.6, 0.7 for the year. But all of the stuff I just said benefits 2025 growth the most.
So let's go backwards. Busi, I want to give you the technology, what investments need to be made. You know, is it only public sector, is private involved? What needs to happen there? And then can I ask the two of you to square up to help me with the climate one? I've got some thoughts, but perhaps you can both help me with the climate and the youth unemployment discussion. So can we start with you, Busi?
So the key investments that are going to be coming in 2025 are those on infrastructure. So opening up private sector participation, for instance, in transport and logistics, you are inviting, there's a lot of interest as well already from the private sector. So for them to be able to take over those corridors that they are going to be taking over and ports that they are actually going to be taking over, they are going to have to inject a whole lot of investment to enable that infrastructure to run as it should. So we are definitely going to be seeing that. I think the continuing of the private sector participation in energy generation, that is going to continue. So I think it's mainly going to be in the infrastructure space. And what can academia do to work with business to solve the challenges that we have as a country and deal with the issue of youth unemployment? I really think that the work that is happening at the moment, it's probably less of an academic exercise, but more of ensuring that we, and this is what the president said, you know, when we had the last engagement with him, said under this second phase of the business government partnership, I want to put the structural reform agenda on steroids. And that is precisely what we need to do, because then you accelerate the structural reform agenda, business confidence goes, and business confidence has actually gone up because the environment is now getting to be conducive. You know, you're seeing business confidence that is at the moment sitting at 45% when it was at 35%, I think at the beginning of the year, or somewhere mid-year. So business confidence goes up, investment comes in, and investment is going to come in through transport logistics. We've got 2025, G20, you can actually showcase, the centers of excellence in South Africa. Only when the investment comes in, the economy can grow at decent levels. And if the economy grows at decent levels, that is how you actually deal with the issue of youth unemployment. So there is really nothing not really nothing, but it's more about, those who have money to invest have to take a bet on South Africa. If we are dysfunctional, they can't take a bet on us. Not even from outsiders, the insiders that are sitting here. If BMW, for instance, wanted to increase and expand their investment in South Africa, when they go to Germany and say that allocate investment in South Africa, they're going to have to produce a very compelling business case. And if our business case continues to be that we can't send goods from South Africa, they have to go to Namibia, they have to go to Mozambique, they have to go to Mauritius. That is not a compelling story. That is why the reform agenda becomes important, because then it fixes and it creates a conducive environment within which business should operate.
Thanks, Pussy. Who wants the youth one? Who wants the climate one?
I was going to just add a little bit onto the tech, and just anecdotally, just some of the things we're doing. And we spoke about digitization that this economy is now embarking on. That is an unbelievable way to use tech to enhance everything in home affairs, which is obviously the backbone. I mean, the payment systems, your identification, it stamps out so much more crime and corruption, not all of it. That is phenomenal. Another thing that's already happening is that if you speak to the Commissioner of SARS, Edward Kisbeta, the amount of efficiencies they are seeing because of AI is unbelievable. I mean, again, you're going to love the stat, but he has now presented that while it used to take, and I can't remember the year, but a long time ago, it used to take 150 days to process a tax return. Does anyone here want to guess how long it takes now?
17 seconds.
5 seconds.
5 seconds.
5 seconds. So those efficiencies, with technology, you can bring in so many more efficiency gains, and you don't have to displace jobs necessarily at the same time. In fact, it can enhance, employment offerings in an economy. And maybe then I'll pick up a little bit on the youth unemployment, but you can take on some of that too, Sanisha, because I feel like being mean. It honestly is a very depressing wave. That's the final answer or question in today's forum. Because I honestly cannot give you a constructive, high conviction answer here. There is just not enough work done on it. I mean, from an education perspective, we've got a group of international investors right now in South Africa visiting from Singapore, and they're very constructive or cautiously optimistic, should I say. They've been covering South Africa for 2 decades. They know it well. And they ask the same question every time they're here. Any progress on education? And there's never an answer. I mean, we've got a great minister, it seems, but it's such a provincial issue. Yeah. Teachers' unions don't help. It's an incredibly sad case, and I don't have much of an answer for you there. On youth unemployment, the statistics, just to give you some here, if you hit 2.5% growth in real terms, and this is obviously comes with the forecast error around it, that means your investment to GDP ratio starts to move up to about 16%. Okay, keeping in mind it's been down at 12 and at the high it was at 22. But at 16% investment to GDP, it depends what the composition is. That's typically when the investment moves from purely capex also into wage bills, which means the hiring of people. And I think a reform that, though, is important for the youth coming into the labor market, which is currently underway, is what's happening with work visas. Because if you're doing all these reforms, I mean, you say you're an engineer, Transnet needs engineers, we don't have engineers. So we get work visas to bring us engineers. So we can bring in the high skills that then are able to create jobs for your low-skilled market. I mean, these are little answers I've got from you, but overall, it's a massive problem. And maybe as a final one there, we can look at expanded definitions, narrow definitions, it's a big number. Are all of those young people actually just sitting around on their couches doing nothing? No, there must be a big proportion that is sadly either involved in crime and corruption or in the informal market of South Africa. So there's another channel where you can actually, we don't understand our informal market, but to be able to formalize an informal market in whatever way possible, there's also an opportunity. But I haven't answered for you how we're going to get that ratio down.
Sanisha, do you want to?
Sure. So I'll chip in on the unemployment issue, because we often think that unemployment is related to people that have done just a minimal schooling and don't have a tertiary education. But what has been quite alarming is that the unemployment rate for tertiary educated youth has been picking up. And so that does talk to the mismatch between what is coming out of the universities and what businesses are looking for. That also ties in with the political sphere of South Africa. So if you think about the GNU representing just under 72% of the parties are in parliament belonging to the GNU, there's almost 30% that would have gone to other parties, including the EFF and MK party. The Social Research Foundation did a survey in September, and they said, if you had to vote today instead of May, who would you vote for? So instead of getting 40.2%, the ANC would have gotten 45% as an example, and there was maybe 2 or 3 percentage points added to the DA number. But that percentage, the Social Research Foundation warns that can very well swing to the EFF, the MK party, the Progressive Caucus, as they call themselves, very easily if by the time we get to 2026 local government elections, people are still, disillusioned by the level of service delivery. So I think, there's a big litmus test coming up for the GNU. As Gina said, that's one of, the big risks. I think it's probably a 2026 risk when we do get the local government elections and people will vote that way. Part of Operation Vulindlela's second term is also trying to get people closer to their jobs. So they look at spatial inequality, and because of how apartheid legacy was set up in terms of the geographical spacing in our country, they're trying to address that issue. And so they said, for example, someone who's in a low income earning job, 40% of their salary goes towards the cost of transporting themselves to that job. And so they're trying to lower that. I'm with Gina on this. It's a huge issue, and I think it does represent itself in the form of perhaps more popular support for the Progressive Caucus further down the line if the GNU does not solve for the joblessness issue in South Africa. I think that is a big risk.
On the climate issue, there's some really interesting work done by Notre Dame University. They show that unsurprisingly, the most vulnerable geography globally, sub-Saharan, the least prepared globally, sub-Saharan. The size of investment required in order to ready ourselves for climate change in the order of $100 billion a year. That's the missing number, $100 billion, which tells you in a single breath it can't be done without partnership, that this requires global funding. It requires global funding and local imperative. A throwaway stat. Gina had a guess at the number of municipalities. I'll also guess a number. In a piece of work that we did on considering Pan-African prospects, this is the stat: 936 dams in all of Africa. 936, half of which are in South Africa. So there is an absolute poverty of infrastructure. Where do I stand on the spectrum? Well, I'm not sure how many of you have been cruising outside today. I'm on the side of those who believe climate change is underway. I'm not going to try and do cause in a short sentence. The chance, if this is underway, the chance of us achieving politicians' target, 1.5 degrees, 0. Ain't going to happen. So, just like whether you want Trump or don't want Trump, he's yours. You have to deal with it. I would say, whether you deny or, believe, I find it very hard to refute the evidence, and we better get on with preparing ourselves for this. It will not be lost on you, given your question, that South Africa is not only very energy intensive in terms of GDP, We use more energy per dollar of GDP than almost any other country. Most of it is coal-fired. And we are also one of the driest countries globally. These are proper problems for us to square up to. Can we run with, are we doing enough? So I got into trouble on the Twitter sphere. A few days before the election, I tweeted this, that under Jacob Zuma, the South African economy grew at 1.7% per annum. Under Cyril Ramaphosa, 0.3% per annum. That tweet went out at 10 o'clock. By 11 o'clock, I was a DA supporter. By actually about 3 minutes past 10, I was a DA supporter. And then to my absolute delight, by Saturday morning, I was an MK supporter, according to... I'm making a silly point. The serious point is whether it's the 1.7 or the 0.3, we are hopelessly off the 1.5 population growth. That's the point that's being made. We aren't doing enough. Vulindlela, is it the basic necessities, or is there enough in the barrel?
I think because they are focusing on the basics, and I think when you look at the issues that have been raised by the credit rating agencies in terms of why South Africa is where it's at and the issues that we need to pay attention to, that is precisely a whole lot of issues that Operation Vulindlela is actually tackling. The big problem for South Africa has been the failure of the network industries. Now, it doesn't matter which country you are in or which sector you are in, you need energy, you need water, you need transport. Those are the very basic fundamentals that you have to get right. So we've been failing at the basics as a country. So I really think that they are tackling what, is it enough? We need to do more, we need to accelerate it, right? And I think what they are doing is mainly looking at changing the current legislation to enable the necessary changes and fixes that need to be done in those industries to be done. Now, Transnet has to, right, do what it needs to do. You know, they have to appoint the private sector participators. They have to, so everyone is going to have to do their bit. You know, bid Windows 7 has to come through. So Gwede and DMRE have to actually do their bit in as far as energy is concerned. So they are serving a great catalytic role, but then it doesn't absorb the ministries, you know, that actually have to do what needs to be done. Similar with water. They are going to come in, they are going to do the necessary amendments to the regulation, and it's up to whatever ministry to ensure, you know, that once you have said in the legislation that this is what can be done, it is someone else's role to implement that, and that someone is going to have to come to the party and do what needs to be done. So they are not the silver bullet, but they're a great start.
Can I
Gina?
also just add to that? The Bureau for Economic Research, the BER in Stellenbosch, has now joined up to do the analysis for OVE, for Operation Vulindlela. Please do not attack them on this, because, or any economist that has to model these things, but they have done their best. They've got a new thing called their Growth Lab, and it's freely available on their website for anyone, not just subscribers, but you can go and download their Growth Lab report. What they have done, and it's a very recent release, they have taken Operation Vulindlela's phase 1, they've extended it into what we currently know about phase 2, and they've been able to model as best as possible a potential growth for this economy, which comes out above 3%. And I'm not one for magic numbers. I'm one for the composition of growth and all of that. But at the end of the day, 3% is at least decent enough with 1.5 to give you a decent enough per capita growth. And the reason it needs to be above 1, your per capita real GDP, is because it's not the same for everyone. Obviously, with our income disparity, you need quite a high number. So I say well above 1, because some people are going to be well below 1, and others are going to be well above 1. And so you'll end up somewhere around 1.5%. That's if OV gets everything right. So the basics, all of these network industries, whenever they are okay, that's more or less what we should, that's our potential, that's what we should grow by. And that means in a cyclical upswing globally, you can grow even above that.
You could get into 4s or...
Yeah.
Yeah.
Absolutely.
Wow. I haven't seen that report. So are you able
What
to
is
put a number to it?
I think it's 3.2.
3.3.
Yeah, it's 3.3.
Okay.
3.3.
Tick all the boxes, everything in place,
Yeah.
and
Yeah,
there's the growth
3.3.
structure,
In 2025.
which is not far off the late Tito Mboweni's number, when he said if you can get these things in place,
exactly.
we're a 3 economy.
Absolutely.
Sanisha,
Maybe just one thing to add. So I thought it was quite nice in the budget this year. They spoke about which sectors have the biggest employment multipliers.
Yeah.
So, we need to see growth in the sectors that can absorb jobs, because then it becomes, growth becomes a self-fulfilling prophecy, and real GDP per capita then starts to accelerate. And the number one industry was construction, which is why they have this big focus on public-private partnerships and trying to grow the investment space, because that basically, there's a 4 multiplier on that relative to some of the other industries, which are around 1 or 2.
and remedies and repairs to transport would be a very obvious contributor in that form. To me, without being naively optimistic, I think that that's the most dangerous form of business. But that feels like a constructive note to finish our discussion this evening. That in the many years that I've been hosting this panel, I have to suggest that this is probably the most buoyant I've felt the mood in many, many years. And what a delight to have this expert group of minds and intellect and experience in discussion this evening. So, Sanisha, Gina, Busi, thank you for giving up your time, your evenings to the room. Thank you for your time. My invitation is, if you can corner them before they leave the room, grab them, they're brilliant. And my wishes to all of you for a fantastic rest of your December, to have wonderful, well-earned rest, and bring your brilliant selves to 2025 to make this economy magnificent. Thank you for joining us this evening, everyone.